Matt the Mortgage Guy, Mortgage Mondays, episode 90, where I'm talking gift of equity transactions. Matt the Mortgage Guy, Mortgage Mondays, episode 90, where I'm talking about gift of equity transactions. These are transactions between family members where the seller gives the buyer a gift of equity. Now, keep in mind this has got to be family members. It's got to be direct line, meaning brother, sister, mother, father, grandmother, grandfather. Can't be a cousin or niece or nephew, things like that. It's got to be direct line family member. And what they do in these scenarios is the seller is giving the buyer a gift of equity. Let's use an example where the house is worth $300,000. The father wants to sell it to his son. He can give a $60,000 gift of equity, which essentially serves as that down payment for the buyer, for the son. So if the son's going to get a $240,000 loan, a nice 80% loan to value conventional loan on that house that's worth $300,000. So he sold it to him for $300,000, gave him a $60,000 gift of equity. The seller nets $60,000 less. That $60,000 goes directly to the down payment for the buyer, the son in this case. So no money is exchanged. But it's a gift of equity in the transaction. If you want me to clarify that at all, feel free to reach out. Really something that's happening quite a bit nowadays, and I'm seeing more and more of these. It's a great way to transfer ownership between family members where the seller is in a position and willing and able to give some of their equity to the buyer on the other end, be it a son or grandson or granddaughter, daughter. Really a neat loan product. So a couple rules that you might want to keep in mind. FHA, if that buyer has not lived in the home for 6 months, they're going to require at least 15% down, meaning that gift of equity has got to be 15% to make the loan to value 85% or lower. If the person has lived in the home for 6 months or more, then they can do 3.5% down or 96.5% loan to value on that loan. Conventional has a similar rule where if the buyer has lived in the home for over 6 months, they can go up to 95% loan to value. So it would only have to be a 5% down loan. And if they have not lived in the home for the last 6 months, they're going to require it to be 20% down or 80% loan to value. So any clarification on any of that, you want to run a scenario by me, see how this works. It's a great product. More and more folks are using it. Mothers, fathers, grandmothers, grandfathers that want to sell a home to a family member and give them a little bit of break, help them with the down payment by giving a gift of equity. It's really neat. So feel free to reach out. Matt the Mortgage Guy. Until next time.
529-7600-916-529-7600. Experienced and professional when you're ready to apply. Call Matt the Mortgage Guy. Call Matt the Mortgage Guy. When you're ready to apply, call Matt the Mortgage Guy or visit mattthemortgageguy.com. Visit mattthemortgageguy.com.